All right, live in 2. Good evening, everybody. RPM with you. Trader Spotlight Live. It is Thursday, October 1st, 2015. It's right here at 9 o'clock p.m. We got Tight Stops on here with us, which is going to do a little members-only spotlight. Hey, Dan, Prolong, and Keldar zeroing. Elvis.
I thought Keldar wasn't coming.
Yeah, he's not. It's probably his wife. I think his wife's the one who trades for him anyways.
Yeah.
It's a bot. So welcome, Tight Stops. I can call you Rob too, right? Is that all right?
Thanks, man. Yeah, that's fine.
I guess we'll. I need to back out my screen some. Keldar, next time I do such a great job at practicing that simple technique that you taught me, and I know I'm overusing it. I had 4 great trades today. It was up almost $400 and some. When I go to throw something on after 3:30, can you stop me?
You're not supposed to trade the last hour.
Yeah, unless you go long, and when it runs 30 points. Hey, Chili. All right, so I guess apparently you can't stop me because you tried, right? So Rob, why don't you go ahead and tell us about yourself, and I'm just going to kick back. Let's try to unless you feel like going more than an hour. I want to try at least get an hour, but I'm exhausted. But if you want to do most of the talking,
right.
Whatever you feel comfortable with, I'll try to.
You guys got to just tell me what you want to talk about, though.
Yeah,
so.
I mean, I've got a pot of coffee here, a whole pot, 12, 13 cups here. So I'm exhausted, man. I've been running around today just getting preparations for the power outages and stuff that happen when we get these storms. And we went and got 55-gallon drum of gasoline. Melanie went and got it filled up and everything. And I had to get that off the truck with the forklift and put the hand pump in it and everything, and then fill up all the propane and all that stuff at the generator. And I'm not living two weeks of no power, because I've done that before. So
I don't blame you. I
figure I can use the gasoline in the car, so if the storm isn't a big deal, and propane always handy.
Oh yeah.
But I'm mentally and physically just exhausted, so I just want to chill and learn from you tonight. So why don't we get started by you just telling us about yourself? How long you've been a DTR member, how you started trading, all that good stuff. Go.
Simply 18 years on Wall Street. Out of college, I started in the back office, so I was basically a scrub doing all the shit that people didn't want to do. But I started as like a derivatives assistant doing P&L on the desk, and then I moved up to a market maker on 3 prominent institutional trading desks. There's Payne Weber, there's Cantor Fitzgerald, and there's the old Solomon Brothers, which is now Citigroup. But I also did electronic trading software sales, so I don't know. I trade full-time now. I'm building another business on the side, but I've been trading a long time, and no matter how many days or years you do this, it isn't always exactly easy. So I come here every day and hang out with you guys and hope for the best and try to stay focused. But I usually use 3 different platforms. I have a day trading platform that I use, and I only use that because they hold my Wall Street licenses for me. So I trade through them directly. It's just a direct access platform. I can drag it into view. It's not much to it. It's really just let's see.
All right, I'm sharing everything on that.
It's
on
just
that
simple. Yeah, see, this is just your basic order entry. And like I said, I only made like a couple $100 in here today. But this is, like I said, it's really just to keep them off my back. So I try to trade a minimal amount to keep my licenses valid. So I use these guys for this. But That's just for day trading. I also keep a regular Schwab Street Smart, you know what I mean? Street Smart Edge. I use that. That's really for just longer. That's really just for longer term positions. I like to do, obviously, a lot of naked puts, credit spreads, long calls and puts. One thing I really like to do is selling weekly puts to collect easy premium. Like today, I did this. I call it the 11-hour trade, and I'll show you just as an example. So Facebook today, you obviously see the rip that it had towards the end of the day. But so what I do with this 11-hour trade, just as an example, so the biggest time decay that takes place is obviously from Thursday night to Friday on those weekly options that are set to expire, right? So what I look to do is find something, and I don't care where a stock is going to go. I just want to know where it's not going to go. So, for example, when Facebook looked like it was starting to pop up today, I sold the puts, and what I always do is this 11-hour trade. So between 12 o'clock today, there's 4 hours until the close, and then you have 6 hours, 6.5 hours of the market being open tomorrow, right? So what I look to do is I like to sell premium on Thursday afternoon, because towards the end of the day, the time value is starting to erode pretty quickly, right? So the closer you get to expiration, the value of that premium is going to keep going down. So I'm basically selling out of the money puts in anticipation that by tomorrow this thing is going to not be down at 88. So that's what I did today. I sold the 88 puts right around 130, and that happened to be the bottom. And I covered them plus, I don't know, plus 40% by the end of the day. But normally I would just leave that thing on until tomorrow, but I didn't like the way the market was trading towards the end, even though it did start to rip. Some of these things were just going sideways. And I kind of said this morning that I was kind of leery about taking any kind of, I was trading small size all day today, and I was keeping it tight because I really didn't know where this market was going to go. But this is an example. If you're just looking, I always say you want to be the house when you walk into a casino. So, would it be better for me to buy the 90 the 90 calls out of the money and hoping for a pop tomorrow? No, I'll just sell the puts. So, very similar to when stocks are oversold or stochastics are oversold, I like to sell puts, and as the stock bounces, the premiums obviously decrease, so I cover those. And vice versa. If a stock is overbought, I may sell a call spread. I don't sell naked calls because you get your face ripped off. But I'll sell call spreads when something gets overbought, just because I'm expecting a pullback. So a lot of weekly options. Those are my things. But you guys see me scalping the shit out of. I usually trade 4 different stocks. Used to trade a lot more stocks, but I found that if you can focus on just a few, and you guys see the way I trade Gilead, I can pretty much guess when it's going to bounce and when it's going to pull back, and I kind of have an idea of watching the momentum. But one thing you're probably wondering is, why does he choose Gilead? Why does he choose Apple, Facebook, and J&J? Well, the one thing is, like I said, they're J&J and Gilead are, drug and biotech companies, right? So it's just something I'm interested in. And Apple and Facebook are obviously movers as well, but Gilead has an average true range. So I'll give you an example. If this is, you guys probably know this, but for example, Gilead.
Hey, I like the way you're using TradingView for your charting, man. Nice and clean.
Yeah, K-Rod said it best, I think, when he was saying that, he'll trade a chart without any kind of indicators on it. He'll just use support and resistance. So, for example, I was pointing out the Gilead this morning for a couple of days here, we really had this 97. Sorry. Let's go back here.
Is this thing, this Trading View now, is it working real time on like the 1 minute chart? I mean, you get real time prices? I can't remember. It's been a while.
It takes a couple seconds for it to fill in during the course of a day.
Well, it's relatively real time.
It's not picking up, obviously, after hours.
Yeah. Johnny uses this too. We use this to power the HPS site.
Yeah, I actually dig it. Like I said, if a lot of times I'll trade without any indicators. I'll just, like K-Rod said, I'll just use support and resistance. And look, obviously, that first candle this morning turned out to be the high of the day. But as you can see, so look at this. So 98.77 was the high of the day. 96.33. So that's what, about $4 and... No, I'm sorry.
It didn't fill the gap either, did it?
33.
It almost filled the gap, but it didn't.
Well, I can't. For some reason, I can't do simple math today. But 98.75 minus 96.33. All right, so the range today was basically a $2.42 move. Well, Gilead normally has a $4.19 move from the average true range. So that's important to me because I love to play the gaps. So if I see Gilead gapping up, normally I short the gap up, I buy the gap down. It's pretty simple. I don't want to overthink it. Occasionally you get that gap up and go, but I've done a lot of gap testing, and I've read all the theory on it. And as far as the gap goes, stocks that gap down, they fill the gap. Obviously, buying a gap down is a better play than shorting a gap up. A lot of people think because obviously, right, we want to buy low, sell high. So when you get a gap down, most people will take that, and some people fear shorting the gap up. But stocks that gap down, I found they fill their gap 86% of the time. So once they do fill the gap, they reverse 56% of the time. So just as an example, so I'll give you one that I like to do, and I'll show you my gap strategy here.
Now, when you ran that stat for the 86%, Rob, when you ran that stat, what kind of time frame are you giving it before it, I mean...
That was over pretty much a 54-year period.
Oh, so
I went back and looked at market data, for 54 years ago.
So 86% of them fill their gaps in 54 years. I mean, you see what I'm saying? You
86%.
86% fill their gap within 54 years.
86.
So you might get stuck in some for a while. Obviously, you don't have to wait that long usually. But yeah, I get what you're saying.
Yeah, but
it'd be nice if you said it did it in 2 days.
Say it again?
I said it'd be nice if you could say like 80% of the time they fill their gaps within 1 week or something like that. You know what I mean? That would be a little more detailed. But anyway, go ahead.
Yeah, no, but I'm saying on a short-term gap, on an overnight gap. I'm sorry, I should have clarified that. So stocks that gap down overnight will fill their gap 86% of the time. And once it fills that gap, then there's a 56% chance that it's going to reverse and go back the same way that it was gapping down. So just as an example, so one of the things I like to do when I play, so you guys obviously know where the gap theory comes in from overnight, right? So just as an example, so this is yesterday's close. This is Helmer and Payne. This is that one that Johnny pointed out the other day, and I took that chop in. So what I like to do is I use a longer-term moving average. Now, this is just as an example. I mean, you guys can add, you can add whatever indicators you want. You can add any kind of exponential moving averages. So what I'm just saying is I found that on a longer term, if you put a longer term moving average in to your chart, whether it's a 5-minute, whether it's a 15-minute, whether it's an hourly, depending on, what you're looking to trade. I like the shorter time frame. I usually go for 5 minutes. So I'll give you an example. So it's a pretty simple strategy. So I'm taking off these other ones just so you only focus on this one. All right, so this is a 5-day. This is basically a 2-day chart. Here's yesterday's open. Here's the close. Here's today's open. So obviously last night when the stock closed, it closed at 47 and a quarter, call it 47.28. So you can see that on this longer term moving average on my chart. So it closed below a longer term moving average. The next morning, if you should see a gap up above that longer term moving average, that's a dramatic move, because you got to remember this 80 EMA is taking into consideration a wider move, right? Let's see if you had an 8 EMA. Oh shit, hold on. Screw this up. All right, so this is an 8 EMA, right? See how you see most of the day when you have an 8 EMA, the stock usually hugs to it all day, right? No matter which way you're going. If it's underneath, it hugs it to the upside. So let's add in. So let's take out this one. And we'll make this a 20. That didn't do much for us. Let's go back to, let's do 100 or something. Okay. So you see how the 8 EMA basically hugged it all the way down before. So do you agree that a longer term moving average, it's a more dramatic move if it should gap above it or gap below it?
Yeah, absolutely.
That's how much further you are away from it.
Sure.
Right. So what I do now is I look for stocks that are gapping up on no news, hopefully. And what I'll look to do is I'll look and see if any of them are bouncing above, if any are gapping up above yesterday's previous close when it closed below it yesterday. So I was looking today to see if there are any examples. Anybody type in the chat room something that closed down yesterday and gapped up big this morning? Anybody got any? Trying to think, but so regardless though, so here's the longer term moving average. So it closed below it yesterday, gapped up above the longer moving term average today at the open. And look, 86% of the time we said it'll fill the gap, which it did. But in this case, once it filled the gap, it didn't retrace. Well, I'm sorry. It did fill the gap right here, right? And then it reversed. So there's your 56% chance that it's going to reverse once it fills the gap. And then it just sold off down basically into the day. So I'm trying to think if there's any other ones that we had gapping up today that stayed up. This wasn't a very good example. I was hoping this. So, for example, this 100 EMA, it closed above it yesterday. This is Salesforce. If it should gap below this moving average at the open today, that would be your key to get long. If it closes below it and gaps up above it, you want to short it. So it's pretty simple. I found it to be one of the most reliable ever. I play the gaps every day. You can usually find stocks gapping up or gapping down. Like I said, most people like to buy the gap down. I don't mind shorting the gap up because I don't usually stick around too long, and sometimes I can make that quick fade. So that's something I like to do pretty much every day. And I'm usually just using the first 5-minute candle as my gauge. So once I got a crack at this first 5-minute candle, most of the time I'll take the short with the stop above the high of the day. In some cases, in some of these stocks, I've been a little tighter. Helmerich and Payne doesn't really trade that well. So if you see, you'd really have to use like a 30 or 40 cent stop in this thing. But I usually just wait and see when I get the, let's see, the 15-minute. Yeah, that 15 wouldn't have helped, but as I see, once you get this momentum going back towards the gap, sometimes there's nothing. You don't really have anything to do. You just got to cover your short. So think of it as a rubber band. So it's below this average. You stretch the rubber band this morning. What's going to happen? It snaps back. Like I said, it goes all the way through the gap, fills this gap right here, all the space in between, bounces back up for your 56%, retrace back the other way, and then it just sells off. So why would I look at a Helmerich and Payne? So as you can see, just looking at FinViz, the ATR is $2.50, so the average true range on this stock is $2.50. Well, the high today was almost $49. And what was the low today? $46.50. What's 49 minus 46.50?
What was it? $2.50?
It's 250. It's 250, right?
That's a pretty good percentage move.
Well, guess what? Yeah. So if the ATR, so the average true range, it did that exactly today. The high was $49, traded all the way down to 46.5, and that was the low. So there's your $2.50. So if I get something that's gapping above a longer-term moving average, and the gap it created this morning was what, 47.5 up to 49. So that's 1 3/4 points. If I get a 1 3/4 point gap on a stock that has an ATR of $2.50, I'm going to take that trade usually, I don't know, 8 out of 10 times. Do you understand my reasoning for that? So if you've already created a $1.75 gap overnight, and if something has a $2.50 ATR, and you're looking to fade this thing, you're probably going to look for at least, one of your targets should probably be at least at $2 or $2.50. And, I know hindsight is 20/20, but if you would have laid that short out this morning, you probably would have got that target. If you were fortunate enough to get, shorted on the open. Maybe not $2. Maybe you would have got that $1.75 though. But you see why I look at some of these. So the other ones, so J&J, for example, that has an ATR of $2.33. So today it was 93.74, traded down to 91.80. So that's already $2. So not bad. J&J has a $2.33 average true range. And you had a $2 move today from the high to the low. So that's why when sometimes you see me getting into these stocks that are pretty much beaten down and you look like they're not going to, bounce. I know I got long Johnson & Johnson a little bit this morning. So if you, just as an example, I love to look for the divergences. So this is a 5-minute.
Sorry, I'm still here. I'm just chatting with FT71 for a few minutes. I'm listening to you and
That's okay.
Texting with him. Also, blazing money, too. He's out there locked out of the site, thinks we booted him. And I don't know why people think this stuff. Anyway, I'm going to send him a message.
So just as an example, so I started looking at Johnson & Johnson this morning. I started to see this divergence, and lo and behold, you had a $2 move from the top to the bottom. And if I know this thing has a $2.33 average true range, I'm going to start looking at this thing and I'm going to start salivating because I know, I might get in a little early, but I usually use a tight stop in the case of a divergence. But I basically bought this thing on the low of the day, and if I didn't know the average true range, I probably wouldn't have been able to do it. So, I could have just jumped off. I could have just jumped in based on the divergence that was set up, but like I said, I had this confirming fact that the ATR is over $2, and I just had a $2 slide. So I'm thinking at some point this thing is going to start to bounce. Well, guess what? This is probably the best spot I'm going to get for it. And the fact that we have the divergence here, and if I'm not mistaken, that's kind of where the market, 1220. Is that where the market started to? Yeah, probably around there. So, that 12 o'clock low is pretty much the low of the day in most stocks. But you see my rationale for maybe jumping in some of these things. So Gilead also. So you have a 99.62. You have a $3 range. Gilead has like a $4.20 ATR. So, these are ones when they start to see them move from low to high and they're coming close to their ATR movement, I kind of start to perk up. And that's why sometimes you see me quickly start looking for divergences in some of these. And I like to post the pictures when I see them. So, almost everything's diverged. Yes. Maria, yes, those are my same ones that Johnny uses. Try not to stray from those. Let's see what Prolong's got. Yes, and he's putting out this divergence also. I'll go X. Gotcha. Oh shit, my chat room just crashed. Hold on. Oh, I gotta relaunch.
How can it be my fault this time, Keldar?
How can it be my fault this time, Keldar?
Oh, I'm getting echo. I gotta turn you off.
This time, Keldar.
Oh, this is gonna be fun.
I'm getting echo. I gotta turn you off. All right, we're out there.
There you go.
All right, so I'm back in this. I'm sorry if I missed any questions. My chat room just blew out on me. But my pretty much my primary strategies, I'm usually going for momentum. I got a lot of value out of K-Rod's Trader Spotlight the other night because he focuses on that whole moving average, which is basically just, I can just add that on this one. Here, we'll take out this.
I got to get him. I want to get some of those indicators on one of my other charts. I think he's on to something with that.
Well, this is, I say this whole moving average, you can basically find it on pretty much every platform.
Yeah, he.
No, he's stuck in.
He sets it a certain way.
He's coded in some other.
Yeah,
he has coded in some other like RSIs 1 and 2, and he has so. But I like this whole moving average that he uses because a lot of times, it acts just like a moving average, just acts as support and resistance. So.
Yeah.
You see me sometimes taking 20, 30 cents out of Gilead quickly when I start to see the momentum coming out of it. And when you get downdrafts and you get retracements back to this whole moving average, you can get some really good moves if you're quick. You guys see me. Sometimes I'm in and out of a stock in 10 seconds just because I may get 10 or 15 or 20 cents just on these bounces. I'm not always right, but, if you can keep that hull on, if you're on the right side of the hull, you can usually do pretty well.
Yeah.
So even on like a 5 minute, as long as your stop is below the hull and this thing's moving up, like I said, hindsight's 20/20, but.
Yeah. Let me mention to people.
I learned a lot from.
No, I was just.
I was going to say one of the. Go.
No, I was just going to say if anybody's having a problem seeing your numbers and stuff over on the right, or reading the numbers on the, you can go for the members. They can go full screen on the dashboard. MK18's a fairly new member, and I think Maria's fairly new, and some few more new ones there. You can hover over the center of the video screen, right there where you see the approximately where you see the comma, just below the comma and Gilead 5 there, and you'll see a little icon pop up, and then you can go full screen, so you'll make the video your entire screen. For the members that are watching this, they can do that. You can't do that with the non-members. Non-members is turned off anyways, but you can go full screen, and then basically I'm capturing TightStop's entire computer. So this Windows menu down here on his bottom left-hand corner is just like his computer. That's his whole screen right there we're capturing. And you can make that screen one-to-one on your screen as well from our dashboard. So I just want to let people know that. You can click back and forth and just hit escape. I believe the escape key will take it back to regular, so it focuses back to the dashboard. But there's a few people that have come into the room. Sorry to interrupt you, Rob. I just want to welcome them and just.
That's all right.
I've had a couple people ask me in private messages who we're talking to. We're talking to TightStops. So this is I think this might be the first Trader Spotlight with you, but I seem to recall that you called in during the day one day. Because I remember you talking all about you being a market maker and stuff.
I was to say, when I first started DTR, probably about 3 years ago, I called in for I told Johnny I was a new member and I loved the site. And when he found out I was a market maker, he was like, "Oh, maybe we can pick your brain, call in." And we did like a focus show. Oh, I don't know. Was it Market Munchie or something like that? That's your show.
Yeah, it seemed like that we've talked. You and I have talked before, but now I think about it was with Johnny, and because I remember you were telling us all about the market maker stuff.
If you go into the forum, it's actually in there.
It's in there, yeah. Yeah.
Yeah, I can give you guys the link.
Hit pause. Hit pause.
Hit pause. Hit pause.
I love it.
Oh shit!
Go back to that tab, man, and stop that thing. Oh, thank you.
Holy shit. Sorry about that. I'm looking for the...
I'm awake now. Type in tight.
Here, it's in here.
I don't think it's got your name. He wouldn't put your... he did call it Rob, did he? Yeah, because he didn't even know you were TightStops.
Yeah, here it is. Okay. Here, I'll post this if anybody wants to...
We need to delete that gas bot thing out of there. Had somebody try to order that the other day.
All right. Well, if you go to the forum and you just type in the search Rob Market Maker, you'll see this. I don't know why I can't send that.
Who has put ads on the thing? I'm seeing ads on there at the bottom. How are ads on the phone?
Oh, I don't know.
I just saw ads on our forum.
I don't know.
Didn't you see it? There's banners on here.
What, this one? What are those ads?
I didn't put them on there.
Uh-oh.
No, I think it's probably somebody like Learjet was the admin. I think he's trying to collect some money. Unbelievable.
I don't know. So,
no, it wasn't a hack.
I forget. So what were we talking about? Oh, so I just called in one day and...
Oh, no problem, Charlie.
Johnny taped it, so if you guys feel if you guys feel inclined and you want to listen to it, you can hear me rant for like an hour and a half. So, trying to think. I don't know. I don't know what you guys. What else you guys want to talk about? Other things that I do though. I usually follow the 10 a.m. rule. Pretty simple. Just as an example, it's an hourly chart.
MK there is asking for
most
tips
of
on
the time,
the ES. I think your tips on the ES would be no.
No, I don't trade the ES too much. I used to trade futures for a while, and I kind of got into some destructive trading.
They traded you.
A lot of revenge trades, and pretty much in 3 days I lost quite a bit of money, so I kind of took a back seat from trading futures. And
been there, done
as
that.
a market maker, I really just focused on what I know, and that's stock. So,
Damn,
one thing I always say is there's a lot of easy money out there, so I like to take advantage of options that decay. So, obviously, that last week of options before they expire, you have the rapid time decay. So from that Thursday to Friday night is probably the biggest. One thing I don't do, though, is if you want to trade weekly options, I don't sell puts on stocks until Tuesday of the week of expiration. Some people say, a lot of people used to think that if you sold them on Friday, you would get the 2 days of time decay over the weekend. And come Monday, you'd already have that decay. Market makers have already priced that in, knowing that guys are looking to get ahead of them. So puts are a lot cheaper. The bids for puts are a lot cheaper than they would normally be the Friday before. Is Friday before the expiration. So I would only sell. I'll try to say this way. Hold on. Copy. This is very important. So I don't know if you can see this, but so I sell puts on Tuesday that are going to expire on Friday. But if I'm going to sell puts on indexes, I'll do it the previous Thursday or Friday, because with indexes, you can get time decay over the weekend. You can't do it with stocks, though, because there's market makers in these stocks. So that's something you want to keep in mind. That isn't something I came up with. John Carter does a lot on options and premium decay, and he's pointed this out. So I make it a rule of thumb if I'm going to sell puts on anything. I don't want to expose myself over the weekend. I'll just wait until Tuesday to sell them on a stock that's going to expire 3 days later. So a lot of times, you get that hourly in your favor. For example, the CRM, today, knowing that this thing was going to bounce, I would have probably looked to sell either the 67.5 or the 68s that are out of the money or slightly at the money. Just knowing that we get a pop, and obviously as the stock pops, the premium, it starts to erode away, because what's the chances that it's going to come back down to 68 by tomorrow? So that's why that's why a lot of times I'll leg into these option positions or sell this premium using the hourly, because much as Johnny uses the hourly, if you have the hourly on your side, it's a pretty good rule of thumb. So if you're getting an oversold bounce on an hourly, I'll look to sell these either 68s or maybe 67.5s, and either try to cover partial by the close, or just let the thing ride out until tomorrow. So I can bet. I don't know what the. Here, let's see. So if we look at Salesforce, CRM. Let's look at the 80 puts for today. No, I'm sorry. What do we want? We wanted the 68 puts in CRM. Okay, so what was the high? So the high in this thing was probably 45 cents. Do you agree? If the low of the day, if the puts would have been the most expensive at the low of the day, they probably would have been 45 cents. So if you sold these at 45 cents, where did they go out today? Let's see. So it traded at 3 cents, offered at 13. So actually it's offered at 5. So if you sell them for 45, you do 10 of them, you basically have $400 in your pocket by just riding this out, this pop at the end of the day. So just something I like to do. Like I said, I consider that free money. So I tell J-Dub all the time, I'm like, if you saw $100 on the ground, would you pick it up? Well, you sell 2 contracts in this thing and you collect 45 cents. That's $90. What's the likelihood that this thing is going to trade back down to 68? And many times you'll see these things just trade sideways, up, down a little bit. I don't care. When I sell puts, I'm only betting against, I have 5 ways I can win. So if I sell the 67s or the 67.5s, I win if the stock goes up. I win if the stock rips. I win if the stock goes up and comes back down a little bit. I win if it just goes sideways. As long as it could even come down a little bit. That's the 5th way. The only way I'm going to lose is if this thing drops down to 67 or 68. So, like I said, you could have collected 45 cents. We can watch this one tomorrow. I'm betting that Salesforce doesn't trade anywhere near 68 tomorrow. So, just a way of taking easy percentage or, dimes, 20, 30 cents out of these things. And one thing I like to do, like I said, is I like to do naked puts. So I'll sell puts without buying protection. Yes, there's higher margin requirements, but people say, well, aren't you afraid to sell naked puts? My answer to that is no, because, people say, well, how come you don't buy protection? So if you sell the 67 or the 68 put, some guys would buy the 66.5 as protection, and the most they could lose is the spread between that 68 put and the 66.5. Well, I'm cheap. Sometimes if I have a good feeling about a stock, I don't want to buy the protection. I'll just roll with it. But one thing I will say in this longer-term account, I always keep protection. So I'm down on a Celgene call I've been riding for most of the year, but I collected $7.76. So I actually have reduced my cost. What's 119.26? 119.26 minus 776. All right, so I actually have an average cost of $111.50. So if this thing stays under 120, I collect all of this premium. So $775 I'll collect as long as this thing stays below. Celgene stays below 120. So that's all the way out until January. So, that's really like a hedge. Facebook, I've been riding this thing up forever. I'm only up about 2,300 in the stock, but every week I keep selling weekly calls against it. So I got the 91s against it. I'm down a little bit, but being I sold near-term calls that expire tomorrow, I'm hoping basically that this thing either, if I get taken out at 91, I really collected another 39 cents. So 91.39 I'll get out of, but I'm still only long at 83.25. So just trying to, Facebook is a longer term position, but as you can see, I usually, I tell people, I go, would you buy a house without insurance? Would you buy a car without insurance? Well, why do you buy stocks long-term without insurance? Simple thought process there, but some people just need to lose money. So, what's Keldar saying? I had some disagreements about this earlier this year. Which trades there? Oh, wait, here, let's see. Tyson's going to talk a little between weekly and monthly. Oh, okay. Well, I prefer to do weekly puts because they obviously they expire a lot quicker. So I have less time for exposure out there. Like I said, a lot of times I'll wait until noon on Thursday to sell options that are sell puts on stocks that I know are going to, or for options that are going to expire the next day, because I only want to be, I'm looking for the most rapid rate of decay, which is Thursday night. So a lot of times I found that if you sell premium on Thursday, if you sell puts on Thursday, by the next morning on Friday of expiration, sometimes you have a 30% gain overnight. And if the stock gaps up and you've sold puts, more than likely you're going to be, there's no need to even cover these things. But Keldar, what are you trying to say? What about earlier in the year? I don't know which trades he's talking about.
Should have Skype him in.
But as far as I'm trying to say you're correct and I was wrong. Oh, okay. What about being the house, Keldar? About wanting to be the house when you come into a casino? Intraday strategies. So, okay. Yeah, Elvis Uptown, give me 1 second. I'll go back to that. Elvis Uptown wants to talk about intraday strategies. Just to talk about the weeklies and the monthlies. So I don't like to normally sell monthly puts on stocks unless they're stocks that I really want to own, and I'm looking to reduce my cost. But back in the back in the early days of the bull run, the best thing to do was sell puts in a bull market because obviously, as the stocks go up, those put premiums just erode quickly. But I would rather do the weeklies than I would the monthly because, I don't like to expose myself for that much time. And plus, like, for example, if I do covered calls, for example, in this Facebook. So I sold this week's covered calls, and I know I only collected 65 cents, but if you went further out, let's do, so I collected 65 cents for 2 days. So if I went out 30 days, let's go to Facebook again. See, it's hard to tell. So all right, so the 91s I can get $1.70 for, right, that expire in 9 days, as opposed to selling one that was out for 30 days. You do the math. So it just works out that you can collect more in weekly premiums added up if you sell premiums for 4 weeks as opposed to selling one that's out for a month. So let's see. Let's get rid of that. Let's see. So Elvis Uptown wants to talk about intraday strategies. Let's see. Well, I kind of gave you some of the ones that I like to do. I gave you the gaps. I gave you the selling puts the week of expiration. Trying to think about some other longer term ones. Going to close that. All right, so much like you guys, stochastic support and resistance, I like to use this squeeze too. This is John Carter TTM squeeze. If you have Thinkorswim, everybody has it on there. It's basically free. So let's see if we can pull up a chart. Oh, this is one of them. Okay. So this is just my, this is actually my simulator for Thinkorswim. And a lot of my charts I have on here, but this is one of them. Let me zoom into this. So this is a TTM squeeze. It's just an indicator that John Carter came up with, and he basically sold it for a bunch of money to Thinkorswim, I guess. So what I'm looking to do is, so with this squeeze indicator at the bottom, you're really looking for red. When you see these red dots, it means it's starting to go into a squeeze, meaning the range is starting to tighten up. It's not really any buyers or sellers. It's kind of like a tug of war. It's kind of going sideways. Then all of a sudden you start to see the first break out of this red zone starts to be a little bullish. And you can see these bars are starting to push. So you can start to get long these, but then it kind of goes into consolidation again. I'm trying to find, there was one that really ripped today. Oh, maybe, you know what, I think it was Facebook. Oh yeah, this is the one today. So you can see Facebook was kind of treading water for quite a bit of the day here, just kind of going sideways, and you really didn't get any strength. And all of a sudden, this thing busted out of a 5-minute squeeze, and you could see the squeeze bar started coming in, and this light blue increasing in size is this buying pressure. Dark blue is when it starts to lighten up, but you can see it never really changed. The buying pressure was just basically on this thing from 2 o'clock afterwards, and this thing just kind of grinded higher. But there was not only a setup on the 5-minute, there was one on the 1 minute towards the end of the day. So if you're looking in these two different time frames, you know, you see me scalping 30 or 40 cents or 80 cents sometimes, 60 cents. It's just to try and catch these little pockets of strength. Same thing here. It came out of a squeeze here, going sideways for just a little bit of time. Boom, quick pop, quick drop, and you'll see me in and out for pennies. We obviously mentioned the gaps. HP, this was, oh, that's the 5. I want the 5-minute. Okay, so this is one that I had on there. So this is that HP example that we talked about. Actually, it didn't even set up here. But if I had a longer moving term average, it probably would have been up here, right? If I added in, say, I don't know, what do we got, a 60 there. Let's add in another moving average. Let's make this we'll make it higher, make it like make it 100. Ah, there you go. All right, so Elvis Uptown, do you see this? See how this is my longer this is my longer moving term average, moving average right here, this blue one. This is 100 EMA. So it closed below the 100 EMA yesterday, closed below it, And this morning it gapped up above it at the open, and when you know, it did our 86% retracement, filled the gap, then 56% reversed the other way, and then just kind of slid the rest of the day. But good gap to short this morning. Let's see, anybody got any other ones that were gapping up this morning nicely? We can look for a good gap trade for Elvis Uptown. Anthony loves a squeeze. On weekly, you got to have a better read on where the stock's going to not go. Yeah, that's like what I was saying. So I don't necessarily have to pick the ending price. I don't really care where it goes. I just care where it doesn't go. And I'm betting when I'm selling puts that it's not going to go down. So puts expire a lot faster than the calls as well, I believe. I don't know if that's true, but I seem to remember that. Selling naked puts is safer. Well, like I said, I don't like to buy the protection by doing a spread, because if I have that much conviction in a stock, I don't really want to waste my money buying protection when I'm pretty convinced that I'm going to be right. Why did you select Apple? I mentioned it earlier, is because the average true range of Apple is $4.19. So, I figure if I short something at the top, what I think is going to be the top, or I buy something which I think is going to be the bottom, if it's down a significant amount or up a significant amount, which is probably an equivalent of, I'll say that again. So HP has a $2.50 range, we said. So if I think this is the high of the day, and many times, I'm sure you guys know this, that the first opening candle many times is the high of the day if it gaps up, and the low of the day if it gaps down. It's just basic gap semantics, I guess you'd call it. So once again, gap up in J&J, first candle, the high was 93.86, never challenged that again. Google, initially this was a high. I mean, it spiked higher and we rallied, but obviously the first candle in the first couple of hours was the high on the day. So just common sense. But that's why I choose Apple, because it has an average true range of more than a couple dollars. As I said, Gilead has average true range of $4 and change. Apple's $3.50. Facebook's about $3, and J&J's $2.33. And also Apple, Facebook, J&J are a lot easier to get in and out of for a few pennies. Whereas, you don't want to be trading something like a Regeneron or for Regeneron, for example, sometimes, or here, I'll give you an even bigger one, sometimes IBM at the open has like a 40-cent spread, 50-cent spread. So that's not something I really like to trade, because I can't get in and out. I can't buy on the bid and sell on the offer in a stock like that. It's too hard to get in and out of. It's not liquid enough. Whereas a J&J, it's a penny spread usually. Intel, penny spread. A lot of the thicker stocks, even like Apple, the most you're going to see is 7 or 8 cents at some point, but normally it's 2 to 3 cents in between. So I like to scalp those things, because even with a market order, the most slippage I'm gonna have is 3 or 4 cents. Whereas if you try to buy an IBM just with a market order, you may pay up 60 or 70 cents from where you actually wanted to do it. So, let's see. Why is that one up there? What are those horizontal lines on your charts? Those are just, this is my S1, this is S2. The pink is the pivot on the day. This is R1, this is R2. So basic support and resistance and pivot, along with my moving averages. Those are basically on pretty much any platform. Here, you can even use it on TradingView if you wanted. You could go in and same thing. Pivot points. So they got a lot more pivots in there. They have they have way too many. 15 number of pivots back. Let's do 3. I don't know why that didn't work. But as you can see, they've got your resistance 1, 2, 3, 4 all the way up. Same thing with support. You got the pivot right in the middle. So if I'm not mistaken, 100 and I don't know what the pivot was in Apple today. Yeah, pivot was 110 and change. So that's about right. Yeah, 130, 110, 17. So it's just regular horizontal lines. Ichimoku. Yeah, I forgot to mention that. So this is something I use too. Not all the time, but I like to give it. Supposedly it's the only indicator that looks forward also. So let's get rid of these. Let's get rid of the whole moving average. So I'll put in the Ichimoku cloud. I don't know, it started back in Japan. And basically this is the gist of it. So this is a 5-minute chart. But if you look at a daily chart, this is your cloud right here. This is another cloud. So basically when you have clouds overhead, you don't really want to be long. So this is bearish if it's below the cloud. When it's above the cloud, it's bullish. What's something that was above? All right, so Gilead's still below it on a daily, but if you go to like an hourly, still I wouldn't be getting long this Gilead, and according to this, until it's above 104. But these are just the 9 and 26 EMAs. If you can see it right here, they're just added in. So it's just like having more moving averages. This is really just an outline. So a lot of times what I'll do is I'll short it when I see it getting up to the bottom of the cloud, because I know below it's bearish. When it trades up into the cloud, it's usually a no trade zone, but a lot of times I'll look to short when it's in the cloud, expecting that it's going to plummet. I wouldn't get long this thing until it's above the cloud. So just looking at daily Ichimoku clouds, start just look at the throw out some daily charts. Just start rattling off names in the chat room. Just throw a bunch out. Okay. Let's just look at spiders. That's fine. Still on a daily chart, spiders are below. I wouldn't really be getting long this thing. But as you can see on a 5-minute, this is a good example. So a lot of times what I like to do is I'll buy the first breakout of a Ichimoku cloud on a 5-minute. So I actually have my one of my other charts set up. This one. Let me bring this one across. So as you can see, this is the 5-minute in Facebook. So this is obviously the open today, 9:30. This line right here. So it closed above the cloud on a 5-minute chart. On a daily, it's still Facebook is actually, if you look at a daily, it recently traded below the cloud, was a nice short. Now you're starting to see it. Now it's above this cloud, which is a lot lower here on a daily. But let's drill down into a 5-minute. I want to zoom out a little bit. Yeah, okay, so see how see how Facebook was trading below this Ichimoku cloud this morning, right? Went up. Here, I'll expand this a little bit. So this morning it gapped up through the cloud initially, right? Stayed below it, got up to the bottom of the cloud, rejected, came down, tested the bottom of the cloud, again rejected, got up to the bottom of the cloud again, broke through, kind of traded in the cloud. Again, it is axed many times. The top of the cloud is a resistance. Boom, failed. Came down around, pulled the J-low rounded bottom, started to pull up, failed at the bottom of the cloud, tested it a little bit. Now, all of a sudden, this is the first time it's broken above the cloud and had any kind of sustained move. Breaks above, pulls back to the top of the cloud now. So just as previous resistance becomes support, right? Breaks above the cloud, pulls back, holds the top of the cloud, then it's off to the races. So what I would probably do is I would buy the stock once it breaks above the 5-minute cloud, put my stop below the cloud, because figuring if it comes back down here, many times what it'll do is it'll retrace down to the bottom of the cloud. Then it'll bounce right off there. It's like a springboard. So most of the time I only look for these when I get a break back above the cloud and I get the support again. Clouds on the coffee. So, I mean, good opportunity here if you took Facebook. Some stocks work better with Ichimoku. Ones I found that work best, Facebook, Apple. See, Apple, you got a nice pop above the, tested it. You can see it tested the top of the cloud, pulled back in, tested the top of the cloud, pulled back in. Then it finally breaks out, catches support, breaks out, pulls back, confirms support, and it bounces from there. So Apple works good with this. GoPro, I don't really trade it, but I've seen that this thing works well with the cloud. Look, you had beautiful shorts here at the open. You had a test of it earlier around 1040. That was good for, 29.81. I guess that's not that great. Works good with Twitter. I don't like to trade Twitter, but for some reason, Ichimoku 5-minute works great with it. Alibaba it works good with. So I learned, just by trial and error what stocks work well with this. It's not exactly the greatest. I found it to be one of the better indicators, like I said, for certain stocks. Gilead, I've been trying to use it with it, but it's not that great yet. What I'll really do is just go on basic support and resistance. Like today, I was short, and I had pointed out in the chat room today that 97.5, 97.77 was like the high from, if you look at yesterday, At that time, this was like the range, and it was trading between here. And then we got the break above 97.60, and things just took off. But it's not always. The thing is, though, like I said, it works. The Ichimoku works good with certain stocks, and with others, it doesn't. Only because you get a lot of false signals, depending on how the stock trades. I mean, if you can get a nice thicker stock like like J&J, once it broke the cloud to the downside, I mean, that's, it was straight down. So, something I like to do. What else? As far as other intraday things that I like to do, I'll show you. Elvis Uptown, one thing is, let's see. I like to do these Keltner channels. So this is a daily. I'll pull this in for you. Okay, so here's a 5-minute chart. This is something you might want to take a look at. So the way I have this set up is these upper and lower bands of these Keltner channels are set up for a factor of 2. So these are 2 standard deviations. There's a +2 and there's a -2. Well, much like Abby, when she trades her futures, she looks for like 2 and 3.5 standard deviation moves, which are extreme moves. So a lot of times what I'll do is I'll focus on this 2.5 or this 2 standard deviation move, and wouldn't you know, when it gets up to a +2, it tends to pull back towards the signal line in the middle. If it touches the 2 standard deviation to the downside, it tends to gravitate back towards the middle. So it's constantly just bouncing and fading, bouncing and fading. So these are good opportunities sometimes to get into stocks when you're looking to see what, where a stock is actually going to bounce. Here we can even add in a 3.5 standard deviation. You might get even some more. You might even get in some bigger bounces. The on-balance volume indicator, that's really just an indicator of when smart money is getting into it. When you start to see the volume picking up, they say that smart money is now coming in. You can see this thing is starting to steadily rise, which is probably why Facebook started to cook at the end of the day. But if you look at this, I think Keltner channels, we can add another one. Uh, 15, 20. 20 and 2. How did that work? I don't know. I don't think I did that one right. Factor of 2. Let's see. Oh, okay. Yeah. Okay, so these are so now I just added in 3.5 standard deviation moves. So if you see an extreme move down, so you add a +3.5 standard deviation move to the upside, all the way down to a -3.5 move an hour and a half later. So when you see extreme pushes to each band, so right now this Facebook is actually at a 3.5 standard deviation move on a 5-minute chart. So I'm expecting at some point that this thing is probably going to pull back at some point, hopefully to closer to 90, which is one of the reasons why I sold the 91 calls against my Facebook position today. And I'll show you why. If you look at the calls that are expiring tomorrow, which stock has the most open interest and the most volume? The 90s, right? So what I'm expecting that to happen tomorrow, hopefully, is that Facebook, they're going to pin it to 90. So I sold the 91s against it, assuming that they're going to pin this thing to 90 because they want to try and inflict the most pain on the guys that are at 90. So I'm hoping, like I said, so I sold I sold calls against it as it was running up into the close, but expecting to get some overnight decay. Hopefully we get a gap down tomorrow, or guys look to pin Facebook to 90 and they short into any kind of strength. And hopefully my 91 calls tomorrow, although I'm down money right here, I'm hoping these are going to be profitable by tomorrow at some point. So as the day goes on and the further this thing moves away from 91, the more rapidly this premium is going to decrease. So that's what we're looking for. So if the ATR is large enough, can you just take a look for quick scalps using the extreme Keltner ranges? Sure, you could do that too. My reason for trading these stocks is because they have a decent range during the day, right? Let's look at some of the other ones. GE doesn't interest me because it only has a 71-cent ATR on the day, as you could see right here. Google has a $16.95 ATR. This might be a good one. What I'll do is, a lot of times if a stock has a large ATR, I'll do smaller shares. Obviously, if I want to short 1,000 shares of Apple, it's going to cost me 110,000. I don't have 611,000 shares to short a Google, but I could short 200 shares or 100 shares and try to make this part of this 16.95 true range of the day, especially if it gaps up or gaps down. I'm hoping that first candle is going to be the higher low of the day, and I'm going to try and catch some of this move here. Other crappier stocks, let's see, Baba's $2.70 move. If I saw that thing gapping up maybe like $3, especially if it's gapping up through a longer term moving average, I'll take that trade. I'll look to fade that trade because there's some juice in it. If I'm trading Sherwin-Williams, it has an ATR of $7.29. If the stock is gapping up 30 cents, well, that's not something I'm going to short. I'm looking for a big move either way that's close to what the point move that it's gapping is close to what the ATR is for that particular stock. Because like I said, if you're normally looking to short the gap up or buy the gap down, if you have a big gap that's equivalent to your ATR or close to it or is several dollars, you have a greater chance of making money, if that makes sense to you. I'm not going to short these high beta stocks that when they gap up 10 cents or 20 cents. I'm looking for stocks. So that's another example. So, we all know that 75% of the stocks, or 4 out of 5 stocks, move in the general direction of the market. So if I have the market gapping up, I'm looking to fade that gap. I'm looking for stocks also that are gapping up. If the market's gapping up, I don't want to buy a stock that's gapping down. because more than likely that thing will probably sell off. But what I like to do is, like I said, for example, you want to look for stocks that have no news. So let's say Google announces shitty earnings tonight. Tomorrow, so the stock's down like 100 points after hours. So tomorrow morning, that's going to weigh on the market. So probably anything that has to do with tech is probably going to be gapping down based on Google's numbers from the night before. Well, look outside. What I would do is look outside the tech sector. I would go to look at the biotechs. What does the fact that Google missed earnings estimates have to do with Gilead? They're not in the same business. They don't do the same thing. They don't trade the same way. So I'll look for weakness in Gilead to take advantage of the overall gap down in the market, or the gap down in Apple. The gap down in Google. So just something to think about. And a lot of times you'll see me, I'm in and out of stocks so quickly. They call me tight stops because that's just a reminder to myself to not take big losses. I would rather take 3 or 4 shots and get stopped out for 10 or 15 cents when I have a good feeling on something than buy 500 shares with a 50-cent stop and watch a thing go down just to take me out. I'd rather, many times on a gap down, I'll be in early and I'll get stopped out on that first one, but I may take it 2 or 3 times after that, trying to catch that bounce where eventually I'll get it, where I will get this part of this $7.29 move. I might have got stopped out for 20 cents, 20 cents, 20 cents, so I lost 60 cents. But then that fourth time when I get long, I might catch that bigger move that fills that gap and maybe get, 2, 3, 5 points if I'm expecting that I might have gotten a low. So just something to think about as far as ATR. I never really used to think of it that way, but when you're playing the gaps, you really want to try to put as many things in your favor. So look for big ATRs, trade stocks that have big ATRs, trade stocks that are gapping up or down on no news. Trade those stocks if the ATR is about as equal as the gap from the previous day. Just something to look at. Another thing is something I like to do, and this is something I've mentioned, I think, to Keldar before, but I like to do what's called a bad news implied volatility crush. So I'll give you an example here. So Dunkin', right? Dunkin' earnings came out, right, last night? Or what was the news in Dunkin' that created this thing today? Anybody know? Was it earnings? Let's see. What was the news in Dunkin', guys? All right, so they guided down. Okay. So all right, so this is obviously Dunkin' from today. So this implied volatility, what I do is I look for stocks that are gapping down on bad news, earnings, I don't know, something happens, they have a secondary, whatever it is. Most of the time it's earnings, but typically the bulk of this down move is already before the cash session opens, so guys are probably trading this. I don't have the extended on here, so I don't know what the pre-market was doing. But typically the bulk of this down move is already priced in before the cash session opens. So what you get is you get this panic at the open. And what happens is when you get that panic at the open, the implied volatility explodes for the first 5 or 10 minutes. So what I'll look to do is this fear factor that just comes into the stock when this thing is getting hammered, what I'll do is I'll sell that bump up in implied volatility. So let's take a look at this. So it closed at $49 yesterday. opening print was 45, and it traded down to 42 on the shitty news, right? So let's go in and look at what did the 42. So what I would look to do is I'd probably look to sell the 42 puts to collect so these 42 puts, because they expire tomorrow, they got a lot of juice in them, right? Because it's all bumped up because there's fear in the market and there's fear in Duncan, and oh my God, they guided down, sky's falling. So what happens is the implied volatility is going to jump in the first 5 or 10 minutes. So what I look to do is I like to sell that. So you figure what was the lowest Duncan was 42.75 this morning, right? So would you guys agree that the 42 puts, the high of the 42 puts will be probably the low of the day if you sold them? So let's take a look. Duncan. Now, this is probably a bad example because Duncan options don't trade that well. But the 42.50s, let's go to those. Oh, shit. See, they don't have weeklies, but let's see what these traded down for. So the 42.5 puts, the high was $1.10, the low was 58 cents. So obviously, there's a spread there, but if you were obviously able to sell those puts on the open for $1.10, if you were able to get that opening print, which was the low, and you were able to cover that thing, the low was 58, the high was $1.10. So if you can collect $1.10 and cover at 58 cents, I don't care how many contracts you're doing, a 50-cent move on some options is pretty good. So I'd rather do this on a stock that obviously has weekly options, because as this thing bounces or even goes sideways, even if the stock goes sideways and you sold puts on it, you're going to get the bump up in implied volatility. You're going to get it. It's going to crush the implied volatility. So you're selling it when it's all juiced up. Now that the news is out, all the fear is coming out, okay, we're just going sideways, implied volatility is going down, implied volatility is going down, still going down, it's going sideways, it's not really coming up. So by 2 o'clock, you could probably be out of this thing, at some point. I'm sure probably this was the high and this was the low, but like I said, this is probably a bad example to use because it doesn't trade options. But if you had a stock today that traded down, anybody have any stocks that they were watching that traded down on horrible news that has weekly options trading? Anyone? Bueller? MU. Oh, let's look at Twitter. How was that piece of shit done? Sorry, I hope you guys aren't on Twitter. Garbage stock. Now, that really wasn't a disaster as far as the gap down, I don't think. It might be tough. I like the ones that you get the big flush down on one, just on one candle initially. I mean, I guess you could do it in something like this, an MU. I don't know, I'd like something that has some volume in the options. You might have gotten eaten alive if you tried to sell the implied volatility on this one, but let me take a drink. Sorry. All right, so I'm doing all the talking. What do you guys want to say? What do you want to talk about? Chicks, fast cars, what? What about Black? Oh, Bluebird, that's a good one. Let's see. I don't know if Bluebird has weeklies. or intraday? Well, like I said, for intraday, I like to squeeze. I like to use the whole moving average. I like to short against that. I like to use the 20 especially. Let's look at that Facebook. Something I pointed out in the chat room. I'll go back to my studies here. Hold on. Let's take out this 101 because I don't use that. All right, but I've said this before. Institutions, and I know this only by the fact that I used to trade orders for institutional clients. They buy and they sell stock, and I go out to the marketplace and actually do the trades for them and buy stock for them in the marketplace. They look at charts just like we do, and I know they focus on the 8, the 20, and the 60 EMAs on a 5-day chart, on a 5-minute chart. So I like to use those charts also, because if the big boys are looking at them, I want to be looking at them too. And you can see this 20, most guys, institutional guys, they make their living by using this 20 EMA. Notice how once this thing gets above the 20, you get a pullback to it, bounces, pullback, bounce, pullback, bounce. Not just Johnny, but like I said, institutional guys love the 20. Give me any stock that was trending up during the day, and I can guarantee you had pullbacks or fades off of it. Boom. Twitter traded below the 20, basically stayed below it the whole day. Came up, tested it, failed. Tested it, failed. Tested it, broke above, came back down, failed, stayed below it. So a lot of times I find that these 20s or the 60 EMA also act as support and resistance. So as far as intraday, I would just try to stay on the right side of these two. You got them sloping down. It's no secret, right? A shorter term moving average crosses through a longer one. The 8 crosses through the 20. Boom. Down. Tries to come up, fails. Tries to come up, fails. And so on. And I mean, if you want to use your stop above the 60, a lot of times I'll use the 60 EMA as my stop, because you'll get, if you put it too close to this 20, you may get stopped out and just miss the move down again. So, Apple, same thing. You see this 60, 20 and 60 crossing. Now, the other thing I like to do is, let me see. I want this one, this one. All right. The platform shut down. So this is just a daily. Once again, these are Keltner channels, and these are standard deviation moves. I believe these are 2 plus or minus 2. Yeah, factor of 2. So these are plus and 2 standard deviation moves. So what I like to do is I look at the new 52 high week list, and I usually pick stocks from there, and I just want to confirm that the trend is either bullish or bearish. So what I look to do is I got this this is my 100 EMA, and this is my 50 EMA. I look for trades where the 50 EMA is higher than the 100, and vice versa. If the 50 drops below the 100, I'll look to go short. But with these Keltner channels, you get these 2 standard deviation moves, and while this thing is starting to grind up, you see at the top of the channel it pulls back. You know, it makes a +2 standard deviation move, pulls back to the center. You can see this one, it came down, held the 2 standard deviation move to the downside. So I like to use these for adding or selling calls into strength or buying long calls to catch the move up. So like I said, you want to just find something. Give me something that's, it's reversion to the mean, same thing. So I'm trying to think of something that's really just been cranking. Oh, yeah. This is our favorite stock, Dexcom. Nice move, right? Well, if you zoom into this thing, see how all of a sudden, at this point, you had the red line break above the... yeah. Exactly. Yes. So you got this 50 EMA is above the 100 EMA, so obviously it's bullish. So I, anytime I see a pullback in something that's making new highs, if I see a 2 standard deviation pullback, I might look to get long this thing. So look, it's still above the 100. Boom, off to the races. Gets to the top, pulls back to the signal, just kind of grinds all the way up. Then you get this nice big gap down. Oh, 824, that was the day the flash crash. So it made a ridiculous move down through it and didn't look back there until this week. So, I mean, you get, you buy it at 83 and you sell it at 103. That's not bad over a course of, a couple of weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so 3 weeks' time, you got 20 points. So, like I said, it's just something to focus on as far as longer-term plays. Elvis, I can't think of any other intraday that you'd want to see. I look for divergences. I follow insider purchases as well because the great Peter Lynch said that insiders sell for all different reasons, but they only buy for one reason, and that's because they expect their stock to go up. So Jim Cramer wouldn't agree with me. He'd tell you that the only time you want to buy an insider, anytime you want to buy a stock that an insider is buying is when it's at the high. That's not really true. I'm sure there's more conviction if they buy it at the top, if they're buying a huge amount, but I get everything right from FinViz, which I'll show you. So if you go to insiders, you can look at all transactions. So buy transaction. So let's see. See if we had any good ones lately. So OMED. Let's see something. Here, this is one I'll use for your example, Gas. OPK. Okay, look at what this stock has done. Gas will tell you when he got long this thing back around $8 or $9. It was back in 2014, if I'm not mistaken. And if you look, this guy, Mr. Frost, look how many shares he owns. 157 million shares. So when a guy is out there buying $500,000 worth of stock, as he did, as was announced tonight. No, sorry. Yeah. No, I'm sorry. This morning before the open, they announced that he had bought 500,000 shares, or $500,000 worth of stock. That's not really something that I would follow if the guy owns 157,000 shares. Whereas if a guy buys a brand new position and he doesn't own a lot of shares. I'm trying to find one where he doesn't own a lot of shares. So if an insider buys stock and he doesn't own a lot of shares, or it's a new position for him, and depending on what his title is, CEO and CFOs are usually the best. Yeah, guess if he dies, that thing's going to zero, I think. So I think you're in trouble. So much like Kramer says, not all insider purchases are created equal. Something like an OPK, I probably wouldn't buy. Trying to see ones here. I know that I know there was an insider purchase in Sears Holding this morning, and J-Dub pointed it out because he knows I watch the insiders, and he said that Eddie Lampert bought stock. Well, once again, he bought $3.5 million worth of stock, but he owns 29 million shares already. He's the guy who did the whole deal. So the first time, and this was way back when, several years ago, I bought a Sears insider purchase when it came out, and I bought the stock at 50, and I ended up selling it at 120 months later, because that was early on when Lampert didn't own a lot of stock, or Berkowitz didn't own a lot of stock. But look, both of these guys own 24 million, and he owns 29 million. So for these guys to buy a little bit of stock, it doesn't really pay. But sometimes I've found that if you buy these insider purchases or follow the insiders, you can make potentially 10% within a day. Sometimes a couple days. If it's a thinner stock, you might make 20% in the same day. I'm just trying to look for some that came out today that moved. Chairman and CFO in Skyworks Solutions. I love this stock, but you could see it was just an option exercise. That's not a thing. You want direct open market purchases. So that's a 10% owner. I'm trying to find something that had a nice CST. No. I'm just trying to find a stock that actually had a good insider. This one wouldn't be bad. Okay, so Five Below. So this is something I would probably look at. The president and CEO he only bought 5,000 shares. He spent $164,000 to buy those 5,000 shares, but he only owns 26 now. So he only owned 21,000 shares roughly before he made this purchase. So, to increase his size by, 20% or 25%, that's a pretty good purchase. So what I do is I go and I look. It was a direct purchase, meaning he went out into the marketplace, this guy, and actually bought it. So let's see, when did this thing come out? So right before the close. Okay, so it didn't come out till 3:49. Sorry, 3:49. All right, it's a big deal. So you got a dime, but I'm betting, mark my words, at a Five Below, you're going to see probably, I would say you get a 10% bump in this thing over the next few days. That's my call. So you might see this thing up to like 37 and change, which would be about 10%. So let's see what happens. Mark my words. PACB. Do I have an insider? those aren't any recent. I'm looking for recent insiders, though. Yeah, it was a nice move, though, guys. Let's see. $5, that was a nice one. Oh, you know what? Seattle Genetics had a rip the other day, too. Let's see that. So the other day you had this pop in Seattle Genetics, right around 40 up to almost $50. Wouldn't you know? Like I said, all insiders not created equal. Now, in this instance, the guy owns 32,000 shares, but it's these Felix brothers. There's Justin and Felix Baker. These guys they're multi-billionaires, and these guys play around in a lot of the biotech stocks. When you see them in buying these things, I know they own 30-something million shares, but usually when I see an insider in Seattle Genetics, I'll buy it. And obviously, let's see, the other day it was, so September 15th at 7:04 p.m., it hit the tape. So the earliest you could have bought it was probably the next day, the 16th. So that's right about where this thing popped. So, I mean, you're talking, basically $5 in a couple of days on a $40 stock. That's a pretty good gain. But like I said, I could have, you can write indicators for insider buying and trade stations. Oh, I didn't know that. See that? If you guys have TradeStation, you guys can beat me to the punch and get ahead of me and run a scan. Well, Gas, can you write one for Thinkorswim? I'll have to ask somebody. So I actually know guys who they make their whole living just by buying the insiders. I had one guy who used to trade from me, a guy from Long Island. Used to just trade the insiders every day, and that's all he did. He didn't worry about technicals. He just bought them because he was looking for that appreciation. And like I said, many times you could see 10% in a couple of days, or sometimes overnight even, or even that day, intraday. I can remember, and the other thing too is insiders, you want to watch when they're buying it. When you see the market's been selling, if you're in a bear market and all of a sudden, and this was a prime example, in 2013, I think it was, the market was, no, I'm sorry, I think it was 2011. When did they all start bouncing? Monthly. I think it was, I think it was the end of 2000 and, no, that's right. I'm sorry. It was the end of 2013, from like November of 2013. You started to see a lot of insider purchases hitting the tape, and I remember keeping a spreadsheet, and there was about 300 names on them, and I could probably count on one hand the number of those insider purchases that were announced that didn't move higher from where the purchase was made. So keep that in mind. If the market's been selling off and you get insider purchases and they're new positions, I would look at them if it's a CEO or a CFO, and CFO particularly because if the chief financial officer is buying a stock that's been acting horrible and he's willing to put his own money to work, there's something there. So I would tend to follow him. And the other thing I would probably do is earnings plays. I like to collect easy money. I look for stocks that actually have reported blowout earnings the previous quarters, like 1 or 2 quarters before, and I'll buy those about 2 weeks to a week out before the earnings come out, and I'll sell them right before it. I'll sell them into the pop right before they actually become released. So I think I'm done talking unless you guys got any more questions. I just wanted to, like I said, RPM wanted me to come in and show you guys some things that I look at during the day, and just wanted to share them with you. Elvis, if you're still there.
Hey, I'm here.
Yep.
I was just on the phone. I'm sorry. I was helping a member. How
do I act on Benzinga news? Yes, I do, Gas. Especially for unusual option activity. If I start to see if he announces it or I see it on one of the chat rooms that there's unusual volume, or the Nigerians mention it on Mad Money at the halftime show, yes, I will get long with them.
Hey sometimes. Rob, you good for another 5 minutes or so?
Okay.
I gotta go tell my wife something.
Yeah, I'm just.
I think
we're pretty
great.
much done. I think everybody's kind of.
Are we done with the questions and stuff?
I think everybody's.
I've been trying to listen to a phone call and listening to you. You've been doing a great job, man. I see your screen moving and all kinds of stuff.
I thought you were sleeping.
No, that would have been great, right? That would have been contributing in the way I should. I told you I was going to be quiet and let you talk. People are sick and listen to me. But
I know, but I was hoping you'd have some more questions.
No. Yeah, you guys talk about me for 5 minutes.
Yeah,
I'll be right back.
We can talk after he leaves.
I'll be right back. Keep going.
Yeah, go ahead. So Gas and I can talk about you. So, Gas, are you still long OPK? You buying more or what? You going to follow this joker? Oh, no, that's fine. Like I said, I told RPM there was some stuff I would have just focused on, but I didn't want to bore people with some indicators and stuff like that, and I didn't want to be repetitive. Everybody uses their own. Oh, okay, good. Yeah, I hope you unloaded around $19. I don't care what platform you use. I don't care what indicators you use. You have to figure something that works for you. So I like to play the gaps. I like to sell premium. So I think, whatever works for you, whatever works in your trading plan, do it. Don't make sure you use stops, and that's pretty much my spiel. So. I don't think Trade for Pay even showed up tonight, bastard. No. No, not at all. No, Gas, I might take a little bit of that, though. I might buy a little OPK, just because I think it's got to bounce at some point. Joel's really good.
All right, I'm back here.
I don't know, man.
Hey, I was thinking about Jim Gas. I was just wondering, some days, and I had somebody ask me about this because people follow Jim sometimes in the room. Jim, are you still working at the hospital and stuff, like some days, some shifts? Is that why we see you like all day some days, and then some days you're gone until the night? I'm just curious. He's working much more. Okay. Yeah, because sometimes I'll have somebody come to me and say, "I hadn't seen Gas this morning. Have you seen him or whatever?" And I thought, you still try to carry both the regular job, and still trade at the same time. different times of the week and stuff. Anthony, your screen is blue. That's actually Rob's screen. That's Tight Stop's screen. That's a nice, pretty color, right?
Yeah, that's my default. That's my default for my Samsung.
Yeah. All right, I'm gonna. I guess we're done.
Yeah, I think so.
That's the wrong one.
Like I said, I hope I didn't bore anybody. I hope I covered some stuff that people may not think about. So
I caught about 75% of it, man. You did a really good job. Really, really good here.
No, I feel like I didn't tell you guys anything. So
yeah, that's the whole point. You make them you make them want more. I try to do that every day.
Well, I mean,
really
I
don't give
obviously
them any useful information.
I say it. I really wish I could post entries and exits all day long, and some days are easier than others when it's because I mean it's hard to put in your entry, put in your stop, then quickly move your stop and tell somebody what I'm trying to do, and quickly moves back and say I'm aggressively moving my stop, and then actually go and move it down. So sometimes I just trade the shit out of these names and don't get the post. Yeah, exactly. Gilead plus 10 cents, plus 20 cents, moving my stop, getting aggressive, moving to plus 50, now plus 60. It's hard. I mean, some of these stocks, the way they move, and Gilead just moves on vapor. So sometimes I'm in and out, like I said, 10, 20, 30. And hopefully I can post it in a timely fashion. But, I try.
Yeah, well, you do a great job in there, man. I see you posting like crazy.
Well, I will try to do better in posting entries, but I try to put screenshots. I try to tell you when I see divergences.
Yeah,
and,
those things a lot of times when we see those.
And
a lot of times when we see those.
Say again?
I was just going to say, a lot of times when we see those, it's kind of like too late. You notice that? I mean, not really too late, but it's like it's a little lagging. You know what I mean? Usually they work out. It's just they've kind of already started to work out when we see those. I wish there was a way that we could predict them a little earlier. But
well, I mean, you see many times I'll post it. I tend to get in a little early, just because I'm
anticipating it.
I don't want to miss it, and I'd like to keep a tighter stop. Whereas if it starts to turn already, you might get a 30-cent move in Gilead. I don't really want to put a 30-cent stop in Gilead. I'd be more comfortable with trying to catch a bottom, getting stopped out 10 or 20 cents a couple of times, and then catching that dollar move.
Right. Did you did you go over your whole tight stops philosophy, because that is your username and all? Did you talk about I didn't know if you talked about that, and I've always wondered.
I did.
Okay.
Like I said, I'd rather, and I did it today just as an example. I was kind of unsure about the market, and I didn't know which way we were going, so I was only trading 3 and 500 share lots of Gilead today, just trying to make 10, 20, 30 cents here and there, just trying to, stay ahead of it. And I mean, I got stopped out a bunch of times flat, but, I didn't have any losing trades today. They were all positive. They were, they weren't for big gains, but like I said, I have this day trading account that I have to keep my licenses for Wall Street. So I just, I'm fortunate enough, and that's one thing that K-Rod pointed out. He was like, wow, he said, you must have cheap commissions if you're taking 10 cents or 20 cents, on 3 or 500 shares. And I said, yeah, I only pay 0.005. I pay 5 mils per share. So on 1,000 shares, that's, $5. So I don't, I'll do that all day. I don't mind making $50 if I only got to pay $5 for a commission.
Yeah. Yeah.
I don't mind taking that money quick. I probably should hold more runners, and I'll probably become rich one day if I do. But I have to remind myself to keep my runners, because I usually have pretty good entries when I post something. I just I suck when it comes to managing them. I take my profits way too soon.
Let me ask.
But then again, I feel like a champ when I take it off and the thing comes in.
So. Yeah. Let me ask in here: is DTR developing a divergence indicator? No limit. Well, not. I mean, it's. You mean an automated one? No, it's kind of built into kind of Johnny's broadcast. It's a an organic thing that we have to spot. I'm finally getting. You guys have seen me spot a few of them too. I'm not as good as John, but between us all, we'll spot them and then we'll mention it. It's the best that we can do right now. Getting it automated is a little tricky, because you got to stochastics are constantly popping back up and down, and you got to kind of look at the chart and kind of see that, after a few minutes as it's playing out, but it's not off the table. Let me try. We're thinking about it, trying to figure out a way to do it. It might be part of the tradeometer one day. We got a pennant forming here.
Yeah, I mean,
see this?
That would be great if you could say again.
We got a sideways, almost a perfect pennant forming here, and this is at the at the tail end of a big bullish run that we've had today. This is, I wouldn't trade this tonight, but this is a bullish pattern because this usually breaks as a continuation pattern. I have a trend line up here above us at the highs of yesterday, I believe it was, around 30. And I wouldn't be surprised to see this break out to the upside and wind up in the 30s. I've been doing these stop ins. These last 4 trades I did today were stop ins. So what I would do is I'd take and put a buy stop just above the highs of the night. Well, I wouldn't do it tonight because they could sniff you out for 1 contract or 2 contracts and know where you're at and stop you. But basically, when it hits that, the stops kick in and then take you another point or so higher, and you're out at the blink of an eye. You could do the same thing at the bottom. So you could come in here, and I had a couple of people ask me about it. I'll cover this tomorrow, but you could come in and you could put a sell stop just below this. And once a confirmation happens, that's when you're in the trade, and say if this rolled over and it hit that, and then you just look for a little more flush of a point or so. I had this work 4 times today. I did some. I'll talk about it tomorrow, but I wanted to mention what's going on real time right now with the chart. So I thought that was pretty interesting. I know you don't trade futures anymore, but
but I think that 1930 level. If you could see, this is the hourly chart, and when the 2 standard deviation move on the hourly chart is right up at 28.5. So
yeah.
You might
closed
get some resistance up there.
I don't see your computer anymore. I close it. So that's when
Oh, okay.
Got to get Skype, man, because the audio is a little weird. Sounds good. It's just like a delay.
Oh, okay. Okay. No, but just on the chart that I'm looking at an hourly chart of the ES, and same thing. The 2 standard deviation move to the upside is right at like 28.5, and you're saying you could see it trading up to 30, which was yesterday's.
Yeah, it might be closer to 29,
which was the 3 o'clock high today.
Yeah.
60-minute
chart.
But that might be.
We're back overbought on the 60.
I mean, I'm hoping to get a pullback. I'm hoping for a pullback.
It was a pop on Monday morning.
Like I said, I sold those.
Go ahead.
No, go ahead. Say it.
No, I was going to say we had a pop on around Monday morning, which was around 1930. We retested that today.
Right.
We got oversold on the 60 minutes pretty fast today, and then we rotated back up. We're back overbought now. I still think this thing could pop up and test that 30 and even break through and then get up into the 50s. And then still roll right back over tomorrow. I mean, we'll just have to see. This market has been. I'll be honest with you, everyone. I've been getting run over this week. I find myself completely second guessing everything that I'm doing. So I've found this new technique, this breakdown and breakout, stopping. Instead of getting stopped out, I'm part of the stops by being stopped in. It's a totally different way of looking at it. So if we got like a sideways range. We got a sideways range somewhere, define the top of it, define the bottom of it. And if it breaks out from one side or the other, you take it for, a point. And it usually works. It's over in a second. But as that's what I'll be doing tomorrow. It's been tough this week. It's been tough for me. I got beat up and turned upside down, and honey badger chewed me up the other night. Put one contract on.
Well, I've been a lot more patient lately, and it's basically since K-Rod had his since he had his trader spotlight. I've been a lot more patient, and rather than trying to buy the breakout or short the breakdown, I'm waiting for the retracements.
Yeah.
And I'm getting much better entries with tighter stops right there. So that alone has been helping me greatly. I mean, I think my winning percentage has basically gone up to I don't know, maybe 80 or 90% in some cases.
Well, I had 4 of these.
I don't think I took a.
Go ahead.
I was going to say, I don't think I had a losing trade today in Gilead. I don't think I had any yesterday or the day before.
Awesome.
And it's really just been, like I said, taking smaller trades, tighter stops, and, just trying to take profits along the way.
Mm-hmm. What I did today in the yes. And by the way, I'm triggering 2 accounts now. I'm using Apex Trader, which is it's open the OEC platform, and you can have it set up as like an administrator that has 2 accounts in it. You have a drop down box. So I've got the trust account. I'm a power attorney on that, so I'm able to trade that, and then I have my own personal account now that's funded. And the minute that I funded my own account, I'm just trying to, instead of splitting all the profits with him, I want to make more. I keep my own money in my own account, but I didn't want to trade twice. In other words, I don't want to put the setups on one chart or one platform, put them on another one. So I'm doing them together, 1-to-1 ratio right now. Tuesday, I started out like that. Monday did great. I did great. It was just Doug's account. Tuesday, I started out together, and 2 trades right off the bat went wrong. I lost all my brackets. All my strategies were wiped out of the system, weren't in there anymore. I didn't realize I had to recreate those. And then I finally got it. I found the drop-down menu for you. It has join, and then it has the last 3, an account. You can see which account numbers it is, and they join together. Both of them join 1-to-1 ratio. So all set up, got that working. Went to go put a trade on and clicked the chart and forgot that there's a default bracket that's underneath it all. That's just 1 point to the upside, 1 point to the downside. So 1 point stop, 1 point target. And it got and flipped me out so fast. I clicked the chart, didn't even mean to put an order on. I was trying to draw a trend line, and as you're drawing trend lines, I'm dropping orders all over the freaking chart. And I got twisted around Tuesday so bad, I felt like somebody got me drunk and threw me out of the back of an airplane and then ran over me with a Mack truck. And I found myself down $1,200 on both accounts, and revenge traded the rest of the day. Got all the way back to where I was almost break even, and then made 2 more screwed up trades, and then wound up negative $400 for the day in both accounts. And since then, I am totally skittish, scared. So I'm taking the Keldar approach: trade like a cockroach. Only come out when nobody's looking, and wait for the elephant stampede to drop a peanut. Go grab the peanut. Go back underneath the baseboard like a roach. So that's what I'm doing. It's chicken shit trading is what it is. So I'm taking those stop ins. So I'm selling when it breaks a certain level, and there's a confirmation of breaking down below that level, and then I'm buying if it breaks out. And I'm just trying to grab 2 ticks on 2 cars or 1 point on 1 car. I did it 4 times today. It's a viable strategy. It works. I did 4 trades today, and all 4 of them worked. And then at the end of the day, I took that short into this rising wedge here. I tried to take a short. I thought we were going to break down out of this whole parallel channel here and come down and test this area right in here again. And break the 200 period moving average. And I got short right in here and had a solid point. It did not fill. And then turned around and went against me, stopped me out 2 1/4. And I didn't tell you guys this, but I was still on the air. And I didn't tell you this, but I shorted again up here. Ran over me. Lost another one. And wound up puking it out like 10 seconds before the 4:15 close. So I'm running, I'm being, it's just, I need a few gallons of alcohol.
You don't drink anymore, though.
I drink when I see you guys.
Yeah, when you come to New York, that's it, though.
Jesus,
and
man.
then you have some kind of, you pass out or something like that.
I turned around, I looked at my wife.
They have to call the paramedics for you.
I looked at my wife Tuesday, I turned around, she said, your face is beet red. What the hell happened? And I'm like, look, and I point up at the P&L, and she said, which account is that? I'm like, yes. She's like, that's our accounts and Doug's? And I'm like, yes, linked together. She's like, what went wrong? And I turn, I'm like, just leave me alone. And she left the house. She's left the house. She's like,
wives and P&L don't mix.
F you and all that. But everything's great when we get, when she drops by Doug's house and picks up another $1,200 check, 3 times in the last 3 months. I've been doing good. Once I got cushion on top of his account, he told me, first of all, he says, man, just trade it. I don't care, just do the best you can. I don't know what I'm doing in it. I trust you. Well, that was his first mistake. I had some luck the first.
That was his first mistake.
I had some luck the first couple of weeks. I had some luck. I was trading 10 lots for just, a point or here or there. And so I built the thing up and had a couple, like $1,200, $1,500 or whatever it was, like the first week. And I showed him. He said, awesome, And then, right. we built it up. I built up. I think we built it up about $6,000. And he took a draw. He took the draw off the top, and then he cut me 2 checks for what I had made. Well, the way he's looking at it now is even if I'd lost another $5,000 or $6,000 in the account, we're still whole. You know what I mean? We're still break even to what he put into the thing. But not only for him, right. I know his attitude is like that. So it's been easy for me because it's like, there's been no pressure because it's been going well. And, man, it just all, I don't know if it changed because I got my own account there now and it's twice as, technically twice as much on the line because it's me and him at the same time. Or is it just because I got in some bad trades? I missed 950 reversal 2 days this week by like 2 ticks. And they turned out to be 10-point, 20-point right. trades. And I missed them. And it pissed me off so much. I mean, I'm telling you, you're not supposed to have emotions in this. I am doing it wrong. I need a sign that says you're an idiot. I feel so stupid, man. I'm struggling again.
Stop?
Huh? Why should I tell you?
How big are the stops that you're using?
My standard bracket goes on with a 2 1/4 stop. I have one strategy set up for 1 point and one strategy set up for 2 points. And now I have 2 of the break down and break out, stop in trade. I call them stop in trades. I have one that it sets up with a 1 point stop for two contracts for 2 ticks. 2 contracts, 1 point stop for 1 point. And then I have another one that's a 1 1/4 point stop with 1 point for 1 contract. And I stagger those. So I'll show you guys tomorrow what I did today, and it worked great. In a blink of an eye, I want to get $212 every time, 4 times. So, but I staggered them on there. One triggers the next, and then that one covers. And then if it drops down and breaks below that level, which is a bigger level for the whole day, if it breaks down below the bigger level of the whole day, the first one is actually what I call the magnet trade. So the idea is if you break down and you make newer lows, like for example, right here on this, we're rolling over here. All right. So let's just say, for example, let's call this line the low. Okay. This line the low, and then see this level right here. So what you do is you put a stop just below this level by 1 tick. And if it breaks below that, right. It's a good possibility we drop down another 1.5 or 2 points and try to test this level, which was the low. So let's just say it were to flush. You don't even get into trade until it breaks down through there. Now, I wouldn't do this at night. It's just too thin. But during the day, and you got popcorn going on and everything, if it breaks down below that, the chances are it's going to probably come down and hit this. So you cover at 1 point somewhere in here, okay? Somewhere in here you get a point. Well, you got another resting order sitting right here at one tick below the low of the day. Let's just say it's or the low of the last 5 hours or whatever of the trading. And if it breaks down below that, it triggers another one. And so they basically this one cancels and you're flat again. If it just goes back up and goes to Mars, it doesn't matter. This one's still sitting down here. You're not long or short or nothing. You're just sitting there. But if it gets worse and cracks down below the lows, usually the volume pours in. You can get a point in like half a second on that one. So what I'm doing is, instead of trying to get 2 points out of 2 points out of one car, I'm putting on 2 cars and I'm just asking for a point. And you could do the same thing, just try to get 2 ticks on 2 cars or 2 ticks on 3 cars. The chances of you getting your fill and it popping down through there are pretty good, at least in a thick day with plenty of volatility. So it's a way you put more risk on, but it's easier target to get, and you get the same P&L. So I'm using these, and the cool thing is I don't sit there in the trade with my emotions boiling, knowing that I got to really keep a tight ship right now because I don't want to. I don't want to blow out the account I just funded, the small one, and trading them linked together and everything. So I'm not in the market most of the day until the confirmations actually happen to trigger me on one side or the other. I think this is a fantastic technique that people can mix in with their already working strategies, and I think that's the way Kildar is doing it.
Right.
Gas, that's a great redneck trading reality show. Redneck Trading, hosted by RPM. It works every Friday, Gas. We have record viewers, man.
Listen, man, if people watch fucking Honey Boo Boo, I mean, come on.
Just curious, how do you guys like Dixie doing the news in the morning? I think she's getting pretty good at it. I mean, she's only just reading stuff. But I listen to it on the little radio, on my cell phone, and it sounds like morning news. Like, I think she's doing all right.
Hey, Paul, she's no different than Bry Guy reading the news after work. So
I'm sorry,
after
man.
the market closes.
I just think she looks better than Bry Guy.
So.
Sounds better too. She looks better.
Yeah, I'd much rather listen to her voice. She looks and sounds better than Brian.
Yeah, I think so. I mean, if Brian changes hair color, maybe, I don't know. But anyway, we quadrupled her pay last week, by the way. I mean, she's really happy now.
Oh, nice.
Yeah, we're planning on
good.
We're gonna multiply times 100 for next week. And
oh, cool.
Yeah. 100 times 0 is still 0.
Exactly. Hey, man, it's good you get her feet wet.
I mean, you know what?
Pretty soon you guys will be hosting what?
Well, no, I'd like to do dual shows with her because I get, people get tired of listening to me like I do. And, sometimes we don't have anything to talk about. And, I want to get her, I got a mic and every headset, and I've spent $600 on extra hardware and a Sennheiser headset and everything for her. And I didn't even put the mess together. And she'll have a mute button on her side, and we can talk back and forth. I want her to concentrate on news and stories that have popped out during the day. Maybe do like a segment with me, and we go back and forth and stuff, and be like the RPM and Dixie show or something like that. I don't know. We're just trying to break it up. You know what I mean? Make it easier. We'll see.
The RPM and Dixie show.
No, Blazing Money.
Goodness.
Put on a dress. Blazing Money. Never again. I did not like that last dress I tried to wear. I'm not doing it anymore. I get suckered into the dress.
Oh my goodness.
So Blazing Money, what does he say in here? Blazing Money, send me a screenshot of what? Conformations? What's that? Just turn on confirmations. What are you talking about, Jim? Oh, I tell you something that I found too, which I think would be kind of cool. If anyone's trading the futures and you're using the OEC platform, which is about 18 brokers that use it, and a lot of brokers do this, you can actually set up email alerts when you execute your trades. You can set them up for just the actual order being on there, the fill, the exit, all of it. We can actually take those emails and send them to create a special address on our DTR alerts system. And we could actually have, if you configure those, we could actually have those so those send out, and actually the trades would show up either in the trade alert box or your own trade alert box, or, a special bot or a special category for these trades could show up in there, or in the chat room. And Jim is familiar with this because the way the gas bot worked, we kind of linked the gas bot as it executed trades that way, and it worked pretty efficiently once we got it working right. But I was sitting there thinking I was going to experiment with that for my own side. And then if there was somebody else that wanted to do that as well, maybe Andy from Finland, he's always, pick me. He really wants his trades to go across. Maybe we could put a special, we could have a chat room channel that, is for ES trade, ES trades or something like that, and pick a handful of people, and then it would, when it would go in there, it would say, Andy from Finland, ES trade, and then the actual, however it's formatted, but depending on the platform. And then, maybe anybody would want to contribute, let me know. If you don't mind your trades going across and you want to contribute that way, let me know, because I'd love to experiment with that. And to start with, it'll just be a channel in the chat room that we developed just for us to look at, to see how it works and how it looks. But, if you were comfortable with it, contributing that way, if you happen to be an ES trader, it would be neat to experiment anyway, see how it goes. Having said that, though, it's very difficult to try to follow somebody who's trading ES and they post their trades. It's so much better when you say, and for that matter, as a stock trader, isn't it so much better to look at somebody's chart and then they say, okay, you see that 68.50 area up there? That's where I'm looking to short, or that's where I'm looking to get long. It's so much easier to see a chart and then you have time to plan your trade. So the charts are certainly more educational and more worth it. But the reason why I'm saying this is because it is so hard to trade and post your trades in the room in time that somebody could take advantage of it. All it really does is show everybody else that you just made money, or you just lost money, or man, he's in trouble. All it is sort of like a show off thing, because for the most part, people don't get the chance to really follow it, especially as fast as the market moves now. If somebody's already in a short and the market is dumping, a point every 2 to 3 seconds, you've missed it. That person may already have captured a point or two and they're happy and they're out of their trade, and you're just now looking at your order system to try to put one on, and it's already taken place. So the slower the trades are, or the longer the range is on the trade, the more practical it is that you may be able to do that, shadowing somebody. But the fast stuff, not only does it screw with the person that's trying to put the trades and put the trades in the chat room and also manage the trades themselves, by the time that you read it and you see it, it may be, you may have missed it. So it winds up just being information that goes by, and it's not practical. There's no practical use for it. It doesn't educate you at all. And that's the unfortunate nature about trading and scalping futures, because it happens fast. And the only way really to do it for the host is to be on the air and just say, okay, like I've tried to do, all right, I'm looking to get long, 1750, no fill yet. I tell everybody, I show you on the chart, it's easier for me to show you what I'm looking at, and it's easier for you to act on it because you don't have to read it in the chat room. You can be looking at your order system if you want to do the same trade, and you can be listening to what I'm saying and putting your order in the same spot. It's just real hard that when you add that extra, reading and everything together. So anyway, we're experimenting with different ways. There's possibilities there. I don't know if it'll be practical or if anybody would appreciate it or like it, or, the best way to share is with a chart. Tight stops, you're posting charts, right?
Yeah, I mean, I try to post my screenshots, especially like when I see divergences and stuff like that, or maybe something that I'm looking at. But the entries are so hard to get in it, post it, manage the trade, and then go back and move stops. And I'll be honest with you, sometimes I wasted time by posting stuff. It's not to brag, it's to just show that, it can be done or whatever.
Yeah.
And, I'll end up getting stopped out because I wasn't able to move my stop fast enough, I mean, I could have got a lot more money out of it if I would have moved it quicker, but some of these stocks just move on vapors. So, and
I'll be honest, when I'm on the air, and you guys are experiencing probably some of the same thing. The fact that you're in the chat room, you're in the public, people, a couple, 200, 300, 400 people could be potentially reading what you put. And,
right.
So you may be more likely to hang on to one, even though it may be going against you, because you don't want it to look like you got stopped out on it. And we all know people don't want to close a losing trade, By the way, here's that breakdown. So you put your stop just below. You see how this would have worked here? See this? This would have been the first area that you would have worked a sell stop. You would have put your sell stop right here, and you would have got a quick point. You would have been done with that one. Okay, the next one you'll be looking for would be this green line right here. So you put another one underneath there. If it fails through there, it's probably going to flush even more, you see. But now you're already out of your trade and you already captured your point. You wouldn't have taken any heat on that one that's now. And this is 11:30 at night. That would have worked. I could have taken that, but I've promised myself I'm not going to take the nighttime trades anymore. But anyway, so that's a way. You're not even in the trade until the confirmation happens. And you see how the volume kicked in? Well, that volume's enough to propel you through your area that you want to and see how it reverses. So it's difficult to get, a whole heck of a lot. Now, it probably will reverse now and go down and sniff out this area down here. So that now it turns into a magnet trade. What you're looking for is the fact that this area down here is just so appealing, likely appealing. Once the closer we get to this area down here, it's like a magnet. So if it starts to get, you could actually put another sell stop under 1916. Put one there. If it drops down below 1916, go ahead and cover it 15 for a point. It's probably going to touch this. You could have another one sitting underneath this level, another sell stop, and you just capture little bits and pieces of that. If it doesn't get down here and break this right here, you're not in it. So you're safe right now. You're just waiting for it to take place. You can set up a chain of these, and I did that. I had 3 in a row. That was pretty cool. And it's not 20 points here or 10 points there. No, it's not. Hey, look, I took off 50 contracts at target 1 plus 7. I took off another 25 contracts at plus 18. I took it. No, it's cockroach trading, but it'll put $200-300 in your account with single cars probably every day if you can figure out the right spots to do it. That's all I'm saying.
Right.
You get what I'm talking about now, Tights? I've had Anthony wanted to know more about what I was talking about with his stop-in trades. It's
yeah, what you should do is, I mean, even if obviously you probably won't trade on the air tomorrow, right?
No, I probably will. If these set up, I'll probably do them. I'll probably do a few.
All right. Well, I say maybe even during a lull, you can show people what you're actually doing.
Yes.
You know what I mean? Show specifically the buy stops and the sell stops in place.
It's pretty, I think, fairly significantly safe. I mean, there's probably a decent probability that they play out. Almost probably every time. I mean, I had one that went against me. Was it last Friday? I believe it was. But I picked the wrong spot to do it in, and it missed me. It just didn't fill me on the point. It hit it, it just didn't fill me, and then reverse, and then took me out. But even if you did this 10 times, if you picked the perfect, the real good ones, and you didn't overdo it, if you pick the like for example, right here at the B right here, this thing was rolling over and rolling over. See how close it was to this area right here, this one? Well, you could say, hey, you know what, that thing might get down here and it might do it. Well, you just you put it down, you put the sell stop right here. If it turns around and goes the other way, you're not in the trade. It's not like you're backwards in the trade. You're only capturing once the thing is kind of confirmed of a breakout or breakdown. Stops are going to contribute, and there's other people doing the same thing that I'm doing. So it triggers the whole thing to happen. I thought about doing like one where you take one off at one point and then you leave the other one on and put the stop at break even, but almost every time the stop at break even is going to take you out because it almost always bounces back up within a point and a half or a point or so after a point's triggered. But it works better during the day, I think, but anyway, I'm just saying, somebody could add this technique. I was talking to, forget who it was now. Was it MC8? Who was it? MC8? Who? I forget the member. Anyway, he sent me
MK18.
No, she's. I know her. No, this is a guy that's been around for a while. I forget. It's M8C16. He was not in the chat room very often. He sent me an email and he told me he's been using this method and doing like he trades a bigger account and he's been doing it with more like 5 and 10 contracts. And he says it fills the pays for lunch. Is what he basically was saying. It can add up, if you see it setting up several times. Like if you wanted to go to bed tonight, you could put a buy stop at 23.25. Simple as that. You could put a buy stop at 23.25. Now I know that you'd probably like to get long here and get all the way from 17 to 23 is a better trade, but probably a higher probability. And you don't have to worry about getting stopped out. Unless the trade's already confirmed itself, and you could put a buy stop up here at 23. Now it could go up and hit one tick, and then say, "Bam! All right, we just made a new high," and then come back and reverse. It could do that. It can do that. So you got to kind of manage a stop in there that's reasonable. But usually, once it breaks a level or it disrespects a certain support resistance level, usually it'll make another. You've seen it. It'll make another run for it. You know what I mean? And go and try to go more. So anyway, yeah. I mean, it's basically stopping into the trade. So like you can do this anywhere. I mean, you could do this on any candle if you wanted. I use the chart, so I could say, okay, I right click right here. Now in this case, this is my charting platform, but I mean my trading platform. I could right click right here and say, okay, if we get below this candle, I'll stop in a short. Or if we get below this candle, or you can do that. I'm not going to do it that much. I'm going to try to do maybe one every 2 hours. I want the chart to show a pattern, and how you have those days where we just keep tapping on the highs of the day, and then it kind of forms like a triangle, and it just keeps tapping on the highs, and you just can see it squeezing up there. It wants to explode out. So instead of getting long and then having to take a little heat as it pulls back and tries to stop out the bulls, just put it one tick above. And you feel that pressure, that building up on those bullish days, and it just keeps going bang, 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 keeps hitting one level and stopping 2 or 3 times. And then put that stop, just a buy stop just above it. It triggers, and boom, you got an explosion for another point or two. And the same thing for the downside. Those work the best, and you keep testing it over and over and over again. And it's probably going to break it. And when it does, a lot of people are going to throw in the towel. They're going to stop out of their trades, which are fine because they may have tight stops. Some of them put their stops even lower, like a point or so. Well, guess what? Those wind up getting eaten up too. And when those get eaten up, it propels it even further. And you wind up with a cascade, and you're contributing to it as well because you're in the whole thing. And there's other people doing the same thing you're doing. So I think it's a simple technique. And I want to give credit to Keldar. I mean, I can't believe I've been doing this for so long. I hadn't even thought of this because I've been so concentrated on counter trending, taking, buying the fallen knife and trying to get a bounce, or, shorting the top, and trying to catch the top. This is just a clear-cut support resistance. You failed that area. Here we go. Here we go. So, and then you try to capture it. If it doesn't work out, it stops you out. Okay. But if you can get 9 out of those work and 1 doesn't, so I guess the problem is picking where it's going to be. Picking the right spot to do it, because they might be figuring this thing out and saying, let's just go get him about 1 tick, take him out about 1, and then go stop him out. Stop him in and then stop him out. But the thing is about those stops is they trigger and they propel it. You know what I mean? They instantly show up once that level gets hit. You can watch it on the DOM. You can watch it, like 350, 400 of them sitting there. And as soon as it hits and goes below that level, instantly there goes a block of 500 just goes through. And then the next tick down, another 500 go through, and it just gets worse, Yes, they're after you, Mary. Absolutely. So anyway, hell, man, we're 2.5 hours, and I've taken up 30.
Shit, man, I didn't have a snack yet.
Yeah, I drank a damn gallon of coffee. I really like Gas's
that probably
feedback
doesn't help
tonight.
you, man.
Huh?
You don't sleep well, so.
Well, so
you don't sleep enough, I should say.
No, I
don't know.
sleep
You
pretty
should be
good.
drinking coffee at 10 o'clock at night.
Oh, I won't have no problem, man. It takes me 30 seconds to get to sleep. I'm serious. My wife says it's the damnest thing she's ever seen.
Oh, that's nice.
I can get 1 foot on the floor, 1 foot on the bed. Don't even put the covers over me yet, and hit the pillow. If I shut my eyes and I don't make myself open my eyes within a minute or two, I'm snoring. She has to pick my other leg up and put it on the bed and put the covers on me. I'm gone, man. I don't know what it is. It's like pure exhaustion all the time. I can sleep for 30 minutes and wake up feeling like I'm like $1 million. I think it was narcoleptic or whatever. But anyway, see Gas saying what you're talking about is buy stops and sell stops. I don't know. I guess, but these are not. If you're short, you probably still have a buy stop in there for your max pain, or the other way around. So if you're long and the market's tanking, you probably have a sell stop in there too somewhere. These are stop ins, I guess is what you would call it. Instead of stopping out, you're stopping. I call them stop. Let's stop in. Does that make sense? I guess it's kind of different, right? It's just cool though. Mix it in, try it. That's all I can say. Stop. It's one of the simplest techniques I could explain to anybody. No, it's not going to work every time. They might try to front run it. We have some buy divergence here. See it?
I don't know. I just never seem to make the breakout trades.
Yeah.
Like I don't know. I used to try and buy breakouts, and I used to fail.
Yeah.
Drastically at it.
Well, you know what? A lot of times you find yourself chasing, especially futures. You feel like you're chasing a breakout, and then it turns around, and then it puts you in some pressure. It goes back below that, support. Yeah. But this is the platform triggers it for you, so it's a little different,
Right, buy stop, and you already have your targets in.
Yeah.
So
yeah, it's already there, and your order is there. So you see, here we go. We're rotating back down now. See how I was talking about? It'll probably rotate down. You could put another one. You could put a sell stop at 1575. So if it breaks down below this candle, go ahead and cover. At 50, down. You could go ahead and cover just below this one. You could have another one sitting down below here if you want. It's probably a magnet, man. It's probably going to try to test this low that we had at 9 o'clock, 8 o'clock, 7:45, whatever. probably going to test that. When it starts to get, if that's the only thing, in the way, it might not break it, but you're not in that trade, that last trade, unless it does break it. You see, it could bounce off of there and run up into the 30s all night long. It's okay. You can sleep on it or sit on it because you're not in that trade. You're not it's not running against you. I suppose it could trigger and then reverse and then take your stop out. I guess it could. But the likelihood it's probably going to hit you a mild or moderate target and fill you first on the downside or the upside in breakout case. Anyway. Yes, Elvis, absolutely. I'm stopping in as you're stopping out. Who's passionate? No, I'm sleepy, man. Anyway, Rob, appreciate it, man. It was fun.
Hey, man, anytime.
I'll just cut the
like
last
I said,
hour
I don't
off
feel
of
like
it.
I got anything out of it, given,
No.
I hope people got something out of it.
No,
I didn't really find
you didn't
anything
contribute a damn thing.
drastic about it.
You're one of us. You didn't contribute a damn thing. You did great, man.
Exactly.
You did great, man. I love listening to it. It's awesome. You're a good trader, and we appreciate you so much for being here.
I try, man.
You're cool.
One
dude.
one team, one dream. Anything I can help anybody with.
No, it's great. It's great, man. Really, I'd love to have you on again.
We're here to make each other better.
Yeah, and let's do this during the day sometime, man. I'm trying to get more people on the show to help make the show better. If you're, if you're not stuck buried in some trades, that you're really managing or whatever, and you have some free time, during the trading day.
You know me, man. I'm in and out of trades in seconds. I don't get buried. So.
Well, if you're doing
quick and dirty, in and out.
If you feel like comfortable coming on, I'll give you a call. Like we do with Keldar and Trade for Pay sometime, and we just hang.
Hell yeah.
Yeah.
I'd love to get on there with old Joel.
He's great, ain't he? Breaks out the stone tablets.
Yeah.
All right, man. Well, I'll let you go, and thanks.
All right, brother. I appreciate it. Thanks, everybody.
See you tomorrow.
You're still around.
See you, Rob. Thanks, bud.
All right. See you.
All right, so that's the Trader Spotlight, and I did record it. I'll try to get it uploaded. Yes, it was. It was recorded. How do you say his name? Is it Tliut? Tillit? And I realize this could literally be somebody's name, and I'm butchering it, or it could just be a username which really doesn't have a pronunciation, and we have to come with it. Just your initials, Tliut? Tliut? Tliut. Tliut. All right, I'll remember that. Tliut. Cool. So, yes, it was. I do not believe I put it in I'm trying to remember. Did I? The problem is with these shows is each file winds up being about a gig and a half. And I have believe it or not, I have a very slow outgoing connection here. I have 3 DSL lines, but there's no real way to bridge them together unless you bridge them on both sides, and the phone company won't do that. So I have to use one outgoing connection. I only have 700K on each outgoing connection. I have 8K download on all 3, and 3, 700K uploads. And it's fine. I can do a show. I can do, you guys don't really have a problem watching my shows, right? Johnny's got 100 megabit FiOS, and my connection's pretty stable when I host. So they're stable, but there's a limit. I've got less than a megabit going out. So it takes about, I don't know, it takes a good 12 hours to upload a show to YouTube. So I can't do it during the day and stuff because it makes everything so sluggish and everything. So I usually try to do it over the weekend. So I will try to make the Keldar show. I believe I may have put it in there, but let me see. May have already put Keldar's in there because Keldar's was about a month ago. So you go to the forum. Oh, I can do it on this here. Let's see. KHELDAR. Yes, Trader Spotlight, July. Is that right? July? Really? July 23rd? What happened too long ago? So, yes, here it is. Tulip. It's right there. And you see where it says forum at the top of the dashboard. You can click that at any time. And then in the search box, just type in Keldar. And that's the only one that pops up. And that's the spotlight with him. You can full screen it and stuff. The one with K-Rod, he asked that we did not make that public, that recording. So I'm trying to certainly adhere to his wishes on that. So I will not. Tight Stops, I think, wanted me to upload this one, so I will. And but it's gonna we appreciate it if you guys as members kind of keep those to yourself. Yeah, it's just for members. The forum is part of the membership system. Yeah, there is actually. Let me automatic trend lines. Quote Tracker will do it. A lot of platforms will draw automatic trend lines. They're really kind of wacky sometimes. Some of them are. I mean, like it'll Quote Tracker at least. It'll it'll throw something in like this. And it just be sitting there like that. Or it'll go, it'll go something like this, it'll do something like that, where it ignores the fact that this is over here and, it just puts it weird, it'll do stuff like this, like that. It'll be just two candles. It'll go like this, like that. So it's not really, sometimes you will see a, like a pennant or something it'll draw, but then another candle will come in and then it'll disappear. And then that candle will just finish and go the other way. And then the trend line comes back. It's a little aggravating on Quote Tracker anyway. But yeah, there are a lot of platforms will do automatic trend lines for you. Trend lines, though, in general, are kind of easy to spot. To me, it's natural. It's about the only thing I do well. Is on the chart is find a trend line somewhere where other people may not see it. I'll see it. I'll even find something Johnny doesn't see. But in general, he will find more on the chart than I will. But I might find something he just happened to miss. But they're not too hard. I mean, to spot. And like these aren't perfect. We didn't touch here. We didn't touch here. So it's just a general shape. Where an automated system wouldn't draw that. Automated system wouldn't draw that, but that might be close enough to get the general pattern, because the resolution is one tick on the ES. So, it's either got to be below it or above it by a tick, Yeah, how about that 60-minute chart over on DTR2? That is looking interesting to me. Like it's time to bust out. But if we're overbought on the 60 here, it'll draw the 60 out again. So here's a 60 chart. This is similar to that I have over there on DTR2. Now, the only thing that I have a concern with is I do not see on my 60-minute chart, I do not see this here, this breakout. And I don't know why is that. Is there something wrong with that platform? Where is it at now? It's at 16, and we are, I don't know what's going on there. That looks set to break out. Does it not? Capturing the 200 period moving average. This one is showing it has broken out. This is a big channel that we've been talking about for how long now? And this is a breakdown of a big trend line, I believe, that was coming up like this. This to the left here went all the way back to the lows that we made on the day that everybody was getting ruined on that Monday. And this channel broke down out of this line. We came up and we tested it. This right here was when I said, doesn't matter what the FOMC says, we're going to sell the news that day. I shorted this. Got ran over a couple of times on the way up, but eventually made a good one. I made 10 points on that trade. Stopped out 3 times, though, so I wound up only net about 2 points. But remember I said doesn't matter if they're going to raise rates or not raise rates. I said they're still going to sell the news. And that was because we were running up into it. Newbie said that only works with stocks. Well, it worked. And then we finally broke down through this trend line that we were holding for so long. And then we got oversold on the 60, and I said, you watch here. We're going to have a nice retracement back up and test that general line. And that's been resistant since then. And then we worked our way down like this. We came up to this level. And then we had a parallel platform here, a channel. And now we're breaking back above it. And this is normal. You break down. We could get a retest all the way back up here into the 2010, 2020 area, and still that line right there, we could find ourselves up there, and this still could be a bearish chart. I'm just saying it could be, but look at the move that would be. Almost 100 points. 100 points on the ES. Who cares if we make all-time highs again this year? We could still get that and still be bearish. Look at that capture. If you could get some of that. This Boozer chart, genius. Boozer made it. You can't bang the table all day long on lane divergences and how well they play out and ignore this chart. It's a monthly. Every time market got cut in half. So that would put us what? Somewhere down in here. 1,300 on the S&P. If this plays out. Something to think about. The only times it exists on the chart. And every time there was bullish divergence, it bounced. Here's one. It's a big chart, something to consider. So maybe it's already played out, and maybe it's going to go right back where it was. But every other time, you look at the distance that we covered. So this is something to think about. Credit to Boozer for that one. All right, I'm out of here. I've got to get to bed. And if Johnny, if you're out there listening, man, I hope you're feeling better, man. He left today feeling kind of sick. And I took over the last hour or so and kind of worried about him. I hope he's going to get better soon. And I hope we see him tomorrow. But I'll be doing the show regardless. And anybody out there in the way of this damn hurricane, good luck to you. I'm in the way of it. And that is ugly. It has rained here for 7 days straight. And here comes a hurricane with more rain. Hopefully it'll go out to sea. Anyways, everybody up and down the East Coast now is getting wet. Stay dry. I'm out of here. RPM out. Bye. Thanks.